Another journey around the world of business is what awaits us today, Thursday, right here from the Channels Television Studios. It's time for Business Incorporated. That means it's time to do 55 minutes of business. And here's what's coming your way on this episode of the program. We're looking at the details of that PPP agreement for rural renewable electricity in Nigeria. And Ethiopia Airline has reduced shipping costs for coffee. Good news for them. Tanzania is about to get 30 million naira from British international investment. We'll also give you the details on this episode of the program. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. We dive right into business from the global space. Oil prices eased for a fourth straight day on Thursday on worries that the United States borrowing costs could be hiked again if inflation surged, a move that could hurt oil demand. Brent crude futures fell 27 cents, that's about 0.3%, to $81.83 a barrel, while WTI of the United States were down also 35 cents, 0.5% to $77.14. Both benchmarks fell more than 1% on Wednesday. Minutes released, well, much awaited minutes was released yesterday, Wednesday, from the Federal Reserve's last policy meeting, and it showed that the United States Central Bank's response to sticky inflation would involve maintaining its policy rate for now, but also reflects discussion of possible further hikes. Well, Russia has said that it exceeded its OPEC Plus production quota in April for technical reasons and will soon present its OPEC Secretariat its plan to compensate for that error. Also, research shows that there's the expectation of OPEC Plus cuts, which the group together has said that Russia will hold its production cut through the third quarter of this year when it meets on June the 1st. Still in the global space, gold prices fell for a third straight session on Thursday after minutes from the most recent Federal Reserve meeting indicated that some officials were inclined to raise interest rate. Spot gold fell 0.3% at $2,370.74 per ounce after falling more than 1% in the previous session. Bullion hit a record high of $2,449.89 on Monday. U.S. gold futures also dropped 0.8%, $2,337, while the policy response for now would involve maintaining, that's what the United States Central Bank is saying, its benchmark policy rate at its current level. The minutes released also reflects discussion on possible further hikes. And traders are already, well, signaling that growing doubt that the Fed will cut rates at all this year, currently pricing in a 73% chance of just one rate cut by November. A little bit of India now, that the country's gold imports in 2024 is already down by nearly a fifth from the previous year, as record high prices spur retail consumers to exchange old jewelry for new items, according to some of the traders. They're now looking at other metals other than gold. Spot silver was down 0.8%, $30.52. Platinum was lower also, 0.2%, $1,032.54. And palladium was down also 1.1% to $988.25 per ounce. We come to Nigeria now, where the Central Bank of Nigeria has issued new guidelines for bureau de change operations after consulting with stakeholders. The updated rules, effective June the 3rd, requires existing BDCs to reapply for licenses. Other key changes include the removal of mandatory caution deposit of 200 million naira for Tier 1 and 50 million naira for Tier 2 licenses. The CBN also eliminated the annual non-refundable renewal fees of 5 million naira for Tier 1 and 1 million naira for Tier 2 licenses. I'm sure in the coming days, we're going to hear more reactions or some reactions from the BDCs on this. We head to Kaduna State in Nigeria, where in a bid to block leakages and improve revenue collection in the state, the State Internal Revenue Service has launched a cross-sector system for revenue administration portal, and it's aimed at enhancing fiscal transparency in revenue generation. During the launching of the new automated tax system platform, the Kaduna State Deputy Governor, Dr. Hadiza Balarabe, who represented the governor, Mr. Obasani, emphasizes the need for all stakeholders and citizens of the state to pay their taxes as at when due through the multiple channels of payment provided by the service.
We have what we call settlement index.
One of the key features of the Pay Kaduna portal is its capacity to ensure exclusive state ownership of taxpayer and tax transaction data through standard data convergence protocols and the establishment of a central data repository within the service. We are safeguarding the integrity and confidentiality of our data. This will not only enhance our revenue collection processes, but also build trust amongst taxpayers who can be assured that their information is secure. Project Craft and the Pay Kaduna portal reflect Senator Obasani's administration's dedication to fostering a culture of transparency and accountability. By integrating cross-sector systems, we are breaking down silos and creating a more cohesive and efficient approach to revenue administration.
Will come from one
Electrification agency in Nigeria is partnering Husk Energy in its bid to spread access to renewable energy to the rural parts of Nigeria. The partnership between REA and Husk Energy aims to establish a long-term strategic relationship that seeks a global benchmark for scaling the deployment of decentralized solar power projects, otherwise known as mini-grids, in the country. The partnership focuses on the deployment of up to 250 megawatts of interconnected mini-grids, specifically targeting peri-urban and rural communities, including markets, businesses, households, public institutions, health clinics, and schools.
Hand in hand in all this journey to make sure that we deliver. And I'm very sure that...
So let's find out how this is going to work. Obviously, we've been talking about rural electrification in Nigeria for many years. How much benefits or fruit have we seen in that? Let's see if this will be different. And we have the country director of that company that's partnering the Rural Electrification Agency, that's Husk Power Systems. The country director is right here with us, Mr. Oluwarike, joins us in the studio. Mr. Arike, good afternoon, and thank you for your time.
Thank you so much, and thank you for inviting me.
Great. So, well, the truth is, this doesn't come as a big news to a lot of Nigerians, and that's because, I mean, we have Siemens projects that is supposed to give us power. How many years is that now? And we don't see anything. So a lot of people will ask, so why is this different? How is this really going to be implemented to actually touch the life of the people? You're talking of mini grids and all of that. So you are the one in partnership with the federal government. Tell us how this is supposed to work.
I think for us, this is reaffirming our commitment to the country. Nigeria is the world's largest off-grid market, meaning we have the most people without reliable access from any grid. Right, and 2 years ago we made the similar commitments, and last year the Africa Climate Summit we also expanded on that commitment. I think coming out now and boldly saying that 250 megawatts of power is what Husk will commit to generate and distribute within Nigeria means that we are now very much more consistent with our reaffirmations and commitments to the country. Question, do mini grids work? Yes, they do. We are now over 20 plus mini grids in Nasarawa state and expanding to other states within north central Nigeria in the next few months. And the goal here is to ensure that we do our part in ensuring that Nigeria's power deficit issues are resolved or go away. There's been so much talk, like you said, and things not being actioned, but we want to be at the forefront, There's a solar revolution or renewable energy revolution going on. The RA for the last few years has been very, very deep in implementing a lot of policies and actions to ensure that more and more Nigerians come out of energy access deficit, and we want to support that. That is what we are saying essentially.
So obviously, I mean, you're from the private sector.
Yes.
You're in this for business.
Yes.
I mean, let's not play around that. So tell us how this works. Who gets the funding, or who brings the funding? Who deals with the infrastructure? Who builds it? And then how do we get the people? Because I'm sure the people will have to pay for this electricity at some point. Help us understand that.
Currently, we're powering just over 5,000 customers across our 20-plus mini-grids.
What areas are those?
Nasarawa State.
Nasarawa State.
Yeah, and shout out to Nasarawa State. They've been very, very supportive, created enabling environment for our business to thrive. Now, as a company, we've raised last year's Series D of funding, just over $100 million to be able to deploy this infrastructure.
Sorry, when you say you've raised funds,
yes,
is that as an investment from the private sector? Is that from the REA?
It is totally our own investors, private investors, of course.
Private investors in Husk.
Yes, private investors in Husk, but of course, REA has its programs that it runs to support for developers or companies like ourselves in doing what we do. But as a private organization, we've also been able to raise our own funding. And with that funding, we're able to build, own, and operate our own mini-grids. What it means is that we'll put the infrastructure there, we own the assets, and then we'll go ahead to operate it to ensure that our customers have reliable power. And with that, so it's a, brief description is a plant, and then of course, it's a distribution network within a small community of say 3 to 5 kilometers stretch. And then we go ahead to meter the customer. So there's a lot of transparency. Smart metering, we use smart metering solutions that ensure customers only use what they pay for, right? And that's how it works. So we've essentially created a power system that works. But beyond that, we're also interested in what services in those communities that the power that we provide can support. So we are more or less an energy services company providing power, and on top of that, supporting healthcare, agro-processing, e-mobility, and even irrigation and other services to ensure that these communities are using power for the right things to ensure to make their communities continue to grow. Yeah.
All right, so it's good that at least you're already working, so you can tell us the reality of it. And I say that because a lot of the discourse at this time say that a lot of Nigerians do not really want to pay for electricity. And then Nigerians, on the other hand, would say, well, we can't pay for what we don't see. So which one comes first? Do we pay for you to have the money to provide the electricity, or do you provide the electricity, then we cannot provide? What has been your experience when it comes to issues of power theft and payment of bills?
I mean, if we're still screaming up NEPA at this point, then this must be a very, very tough job. And it is. But it is also exciting. I think the gap, or we think the gap that is existing is more or less a breach of trust, right? Because customers expect some level of service, but they do not say it. And someone is saying, you have to pay me, right? So that breach of trust is why the circle continues to go. The discourse are saying we need to be paid, for what we do. Customers are saying, I'm not paying you because you're not doing what I need you to do. So I think it's, and how we've bypassed that is ensuring that every customer is metered from the beginning. So there's I didn't provide you power. You are using only what you pay for. And you are sure, essentially, that if you are paying for this amount of service, you are getting it. And if you're not getting it for some reason, we are quick to let you know why. And also ensure that our resolution timelines are typically between 120 to 180 minutes for basic customer issues. And we are so embedded in these communities that the engagement is continuous. It's like a small child and telling them I'm bringing power where they've never had power before, and then trying to teach them how to use it, what to expect, and what we also expect from you. So that engagement continues to go on. But that is only the difference between us and the discos, where there has been maybe a gap in communication or engagement, and because of that, trust has broken down. But it can be easily rebuilt if we are very, very intentional.
Okay, so I presume you use the prepaid meters?
Yes.
And your customers also do what the disco's prepaid meters do, which is they fill a card and all of that.
So I think Husk is a bit different. Technology. I mean, we are more tech-driven, I would say. These meters are very smart. A lot of remote monitoring going on, and I think we are. Our customers, and one thing we try to do for our customers is convenience. I would not like a customer to wake up in the middle of the night to step outside to start to key in a token on a meter. So we've integrated technology to ensure that payments happen, and then within minutes you get your power without doing anything much, right? Without going to press a token or even see your CIO, because tech has taught us that these things are possible these days. And if we are using smart meters, then we can integrate. If we have smart meters, and we have in this country 2 unicorn fintech companies who have leveraged tech to scale, then we should also be leveraging the same things to provide convenience for these customers. And that's what we've done. As Husk.
These meters, are they Nigeria made, imported? We're also trying to grow the domestic, local
absolutely,
market.
Absolutely. The meters right now are imported, but we see a pathway for local manufacturing to step in here. And we're also willing to support that, because we understand.
We do have a lot of meters manufacturers in Nigeria. Is it that they haven't been able to meet your specifics, or you have just not approached them?
I mean, for mini grids, right, which are different from discos, we operate in last mile areas. So how many times am I going to be able to go there? So I need a very efficient and reliable metering solution that ensures that 90% of the time I can remotely do support the running of the site rather than being there, right? So those are the kind of meters we look for. And if there's any local meter that can do that, of course we want to talk to that person. But what I can tell you today is that the support that we get from the financial service is not imported. It is fully Nigerian, a fully Nigerian company. I want to find a way to integrate, more Nigerian tech companies who can support what we are doing.
I think this is a challenge to our Nigerian meter providers. I know I've had conversation with some of meter manufacturers in Nigeria, and they've said, well, it seems sometimes they are being overlooked. So this is a challenge for you to meet up with this demand, with the specifics. To meet up with this new MOU signed by REA and Husk, and this should be one market for you. So, we have to get that out, because these things are all connected.
Yes,
we're talking of high demand for FX. And then a country like yours, a company like yours, it still has need for FX. Do you understand? So if we have that sorted out within the country, that's some of those demand reduced.
Absolutely. I think we are also very, very interested in supporting local manufacturing at any level. So if these things can be done here, why not? And if we see the opportunity to, work with people who want to do it locally and ensure that they're getting it right, we would do that. We're willing to also be able to support them for pilot projects and things like that. Yeah.
Sounds good. So I'd like to know, you've talked about how your operations are in Nasarawa at this time.
Yep.
Is it the REA that chooses the states you work with? Do you approach states, government, or how does it work for you, to know what state you're going to go to? I
think, firstly, we're a private business, but the guidance for what we do as building mini grids is from NEC, the mini grid regulations of 2016, which is now the mini grid regulations of 2023, recently revised, is what the guidelines say. So, and it is clear what the approach is to approach maybe a community or a number of communities and tell them what to do and where to go from there. However, we always know that there has to be a lot of stakeholder engagement and management. We went into Nasarawa as strangers, right? But today, I can tell you, I am partly from Nasarawa, but we went into Nasarawa and had to do a lot of engagement to even understand where we're going, who's there, who are the people that are the gatekeepers that we need to speak to, and let them know our mission. Who are the people who can support us? And of course, the state government does a great job of ensuring that they have various agencies and ministries that you could go to for various things. In Nasarawa's case, NACIDA, who is the investment development agency, has acted as a one-stop shop for any investor or any private company like ourselves to come into the states and let them know our intentions and they can point on in the right directions. It's the same method with every other state.
What's your next stop? What states?
In the next few months, Plateau, which is very, very close to Nasarawa, is the next state for us.
The insecurity is not a deterring factor for you.
I mean,
we've had a lot of bad news.
Yes. There's a lot of bad news from everywhere, right? I mean, I usually say Nigeria, and growing up here, has had its own phases of insecurity. At some point, it was the South-South. At some point, it was the South-East. But the fact remains that our people are living without power. We cannot abandon duty because there is insecurity. We will do what we can do to be secure, to secure our people and assets. But we have to do this because if we don't, then who will? That is the truth.
If you don't take care of them, who will?
Yes.
Then I'm also interested in businesses. I mean, it's part of what's supposed to be your focus.
Yes.
Especially small businesses.
Right.
Do you have packages or small packages for processing zones, and places like that? Because if we really want to make a direct impact, households are important, but also those small businesses really need power.
No, so we, as part of this commitment or MOU with the REA, there's a portion of this that will be commercial and industrial, right? As a company, we want to also support, commercial and industrial hubs or companies, standalone companies that are into several businesses, from agro-processing to manufacturing. Every business that needs power. We're also keen to support healthcare, and we've also already started doing that because you look at it and say, a healthy nation is a wealthy nation, really. And if we're providing power to people without powering where they go when they're ill, then it's a gap. If we're also not powering where they go on a day-to-day to work or to get their income, there's a gap. So we want to ensure that, that cycle of, what we call a platform approach of supporting whatever electricity or energy can support is how we approach our business, essentially, yes.
All right, interesting. And we do hope this will be different, from other projects we've heard of. We know you're active now. You just signed the MOU, I think yesterday or 2 days ago.
Yes, yesterday.
Exactly. Yeah. So we hope that by this time next year, you will be glad when we call you to say, come and give us an update.
I mean, you heard the acting MD for the REA, Engineer Abalio. He said in his statement that maybe we should even take this to 500 megawatts. And I looked and said, so the what you have here is one, a private sector player, and one, a government institution that are both visionary in what we want to do. At Husk, we already own the largest fleet of mini grids of any company in the world. We are also the first mini grid company to be a bit profitable 2 years ago. So we are very, very deliberate. What we've just done here is reaffirming our commitment to Nigeria and Nigerians to ensure that we will continue to do what we have to power as many Nigerians as we can, as many households as we can, as many healthcare centers and businesses and commercial institutions as we can, for economies to begin to spring up and thrive. This is our goal, essentially.
All right, we look forward to that being achieved. Thank you so much, Country Director of Nigeria, Husk Power Systems, Mr. Oluwaruke, for your time.
Thank you.
Let's take a break. When we come back, we'll head to the markets. To stay with us is Business Incorporated on Channels Television. Welcome back to watching Business Incorporated here on Channels Television. We head to the markets now. We're at intraday. The color remains red from the close of yesterday. Anita Edit has the details. Anita, good afternoon.
Yes, good afternoon, Ini. And well, it's a pullback. It's the bears that had it at the close of a midweek trading session, and the market made a pullback of about 0.16%. On Tuesday, the market had gained about 0.11%. Normally, we put this value in naira value, but in percentage points, we just look at it at the losses were higher than the gains that we had previously, and this is no thanks to profit taking on the likes of Zenith Bank, GTCO, as well as some other mid cap and some other smaller cap companies. So, but so for intraday, all right. So now to our viewers, the intraday numbers for African markets, starting off first with Nigeria, the Nigerian All-Share Index still at 31.23% year-to-date performance and a minus 0.1% month-to-date. But for intraday, it was down by 0.07%, which you see on the screen there, and still struggling in between that 97 and 98,000 points, where it has fallen all the way from that 100,000 points, which we saw earlier part of the year. But between the 97 and the 98, where you see here is just hanging by a thread. Anything can happen either ways, either on the upside or on the downside. But for the South African Johannesburg Stock Exchange, the JSE index, it was very much in the green, 0.26%. That's what they call a marginal, if not moderate, gain for the South African stock market. On the other side of the stock market, so across the African continent, we see Egypt, the EGX 30, making more than 0.5% gain at intraday, 0.54%, while the Kenyan Stock Exchange closed Wednesday session strongly. That was the biggest gainer, if you want to look at it, well, not at intraday, but at least for what we're tracking right now, the Kenyan Stock Exchange was up 1.54% at the close of Wednesday's trading session. Now, still talking about Nigeria's financial market, but this time we're talking about the fixed income market, and in particular, the Treasury bills market, where we saw NTB auction carried out yesterday in between the central bank and the debt management office. And then this time we also saw that the auction was oversubscribed, Nigeria's bond auction as well as the Treasury bills auction. When you, as a matter of fact, take into cognizance Nigeria's fixed income market always has a lot of attraction for investors. We saw an oversubscription. Investors there had offered a total of, the central bank had offered a total of 508.98 billion naira, but the subscription level was far higher by investors against what the CBN had offered across the 91-day, the 182-day, as well as the 364-day tenor. Now, for the last auction that the central bank had sometime in April, the CBN had offered about 2.68 trillion naira Treasury bills, while investors staked 24.6 trillion naira in total, while actual sales was about 7.4%. So 4 billion naira. So we saw that oversubscription still continuing. Now, to give us more details about that, as well as the bond, other markets, let's bring in Miriam Yunusa Yakubu, financial market analyst at Chapel Hill Denham, with the details. Thank you for joining us, Miriam.
Thank you for having me.
Okay, so my first question. Why is Nigeria's stock fixed income market being so attractive? At some point we saw a law, but now what's driving this attraction?
Okay, so at the NTB auction last week, yesterday, we saw oversubscription across the 182-day and 364-day maturity, and we saw the bid to offer ratio for that at 3.5 times and 8.5 times. And this shows how investors are trooping to the fixed income market as a result of higher yields in that space. However, we believe that the market has not fully absorbed the impact of the 150 basis points hike, as the stop rate for the 364-day maturity was 20.5%, 1.69, which is 1 basis point lower than what we saw at the previous auction. What we believe is that the CBN will have to come to the market to issue OMO at the standard 21.5% in order to provide a rate direction for the market. We believe that after this has happened, we will see that the market will correct itself.
So now that's for the fixed income market, but let's talk about the equities market, which moves sometimes in inverse proportion to the fixed income market. We saw that pullback. So what is driving this pullback? Is it profit taking or other factors to be considered?
We would say that the pullback is a result of the twin effect of the higher yields at the fixed income market, as a result of and also the sell-offs that we're seeing in the equities market, especially in the banks like Zenith and GT Bank. Intraday, the market is down 13 basis points. Across other sectors such as the consumer goods and the industrial, it's closing flat. This is as a result of the banking capitalization that, there's sort of uncertainty around it. So it's a twin effect of the higher fixed income yields and as a result of the sell-offs in the equities market.
Okay, Miriam, so I think we'll leave it there. And of course, we at intraday, but we look out for how the numbers close for Thursday's trading session. But thank you so much for your analysis on our show.
Thank you for having me.
Also, Miriam Yunusa Yakubu, financial market analyst with Chapel Hill Denham. Now let's move from Nigeria, from Africa to the Middle East, where we see negative sentiments still pervading the market. Across the board, United Arab Emirates, the two indexes on that exchange, Abu Dhabi and the Dubai FM, both in the red. There's 1.06% for the Abu Dhabi and 0.75% for the Dubai FM. On the other sides of that market, of the Middle East market, we see Saudi Arabia, almost 1%, 0.93% for the Tadawul, the region's biggest economy, still having so much concern in the midst of oil prices as well as some other factors. Earnings report, Q1 earnings report. This is the last lap for some companies that will be reporting their first quarter earnings. So maybe that's part of the reasons why these markets are in the red, as well as the Qatari Stock Exchange, where we see it down 1.12% at intraday. And from the Middle East, we go over to the United States, where we see strong performance being largely driven by the shares of the shares of chip making giant and artificial intelligence darling NVIDIA, which rubbed off on the market, particularly on the NASDAQ here, where we see a 0.84% increase on that market index, while the Dow Jones Industrial Average, the 30 stock index, was 0.09% at well for futures. We might not call that intraday, but it's well before the market opens Nigerian time at 2:30. The S&P 500 was up 0.50%. Now overnight we saw that stocks on Wall Street had dropped. That's on Wednesday after minutes from the Federal Reserves. That's from the U.S. Central Bank had fueled concerns over sticky inflation within the world's biggest economy, and then fears that the central bank, that's the Fed, may not cut off their interest rate, which is widely expected sometime in the month of September. So concerns over inflation is what played into the minds of some investors. But we'll look out for how the market would end for Thursday's trading session. But in terms of Q1 earnings season, which is gradually rounding up, the US Wall Street will be expecting Q1 results from Ralph Lauren, BJ Wholesales, as well as Workday and more. But for the economic front, investors are awaiting weekly jobless claims as well as the new homes sales data for April for the world's biggest economy. So that's for the US stock market. And lastly, for the Asian markets, we see a bit of a mixed picture there. They're also tracking some of the concerns of the U.S. Federal Reserve about the issue of inflation for the U.S. economy. We saw Nikkei being in the green, it climbed back to 39,000 points, although it had hit 40,000, but thankfully it's back in the 39,000 region. While the South Korea's Kospi, it was down in the red. And this is coming as the country's central bank, that's the Bank of Korea, held its benchmark policy rate at 3.5%. That's in line with the market estimate. Meanwhile, the BOK is expected to cut the interest rate by about 50 basis points in the fourth quarter. So that's about 2 quarters from now. But for the close of Thursday's trading session, this is how it turned out for the KOSPI, as well as the Hang Seng Index, very much in the red, 1.70%. For the other two sides of the market, the Shanghai Index 1.33% down, while the Australian ASX 200 Index in the red, 0.46% for Thursday's close. So that's it in a nutshell for the market at intraday and for Thursday.
Yeah, well, Anita, I think one thing that stands out affecting most of the market is that Fed meeting that came out yesterday, and now we see that there's a shift. First, we're expecting interest rate cuts in June for the United States, then move to September. And now some of the traders are actually looking at November. Perhaps we'll have, and that's perhaps at this rate, there'll be one rate cut this year, 2024. And obviously every market is receiving the impact.
It's all eyes on the US, and that's the world's biggest economy, because when the US sneezes, the rest of the market catch cold, particularly across the Asia and the European markets. So that's it. So all eyes for the US inflation and interest rate expectations.
Yeah, thank you so much, Anita.
Pleasure.
All right, now let's head to London. Juliana is standing by, and I think one of the biggest news from the UK at this time is that election date, July the 4th. I wonder how investors, markets, residents are reacting to this. Juliana, good afternoon.
Goodness, there's a lot to unpack, as you can imagine. I think a lot of us are still wrapping our heads around the fact that we are going to the polls in 6 weeks. Nobody knew. I think even a couple of senior Conservatives were pretty surprised, and I would say ticked off, that the Prime Minister decided to go so soon. Of course, he's mandated to have this election before the end of January. So a lot of political pundits were expecting it to be a typical autumn election, so way further in the year. But Rishi Sunak has surprised us. Parliament has been dissolved. King Charles has given his permission. And today is day one of what is likely to be a very divisive campaign. We've already seen Prime Minister Rishi Sunak out and about this morning. He will be doing that. He is going to be very, very, very busy, and he won't be anywhere near the steps of Downing Street. He will be trying to convince the voter, because of course we know, if you have a look at any poll in the UK at the moment, and in fact probably across the world, Sir Keir Starmer, the leader of the Labour opposition party, he is head and shoulders above in this election. He is likely to be handed the keys to number 10. So Rishi Sunak is actually the underdog, but he is going to give everything he can. We know what the key battleground is in this election. It is the economy. Decent data. Yesterday we discussed it on your show, didn't we, Innie? CPI finally has come down to about 2.3%. If you think about it, it was at 11% just over a year ago. So the fact that the Prime Minister has managed to maintain at least one of his 5 promises, which he made at the beginning of 2023, which is to bring down inflation, is a good thing. And I think some political scientists are saying perhaps that's the reason why he's decided to go so early, because this is probably the best he is going to get it. So really tense. Like I said, there is going to be a lot of mudslinging, and it hasn't started off well for the Prime Minister. I don't know if you've seen that picture, Innie, of him delivering his speech in the soaking rain, being drowned out by Labour supporter music. It just wasn't great. But, you know, even though they are saying it is going to be the Labour Party that get it, Sir Keir Starmer has a lot of questions to ask, particularly when it comes to the economy, because we know one thing Rishi Sunak is a numbers man. And although it has been difficult because of what's happened in Ukraine and because of the pandemic, we are not in a recession, and inflation is almost at that Bank of England target, which is a win for Rishi Sunak. So we're going to be seeing over the next couple of days and weeks what Labour's plans are for the British economy, because that is right and centre at the heart of the electorate. So lots to play for. We're going to be very, very busy.
Yeah, I can tell, Juliana, you're going to have a lot of fun in the next couple of weeks. Being a journalist at this time, I think that's a specs also. But anyway, we're here to take it to the Nigerian viewers especially. But there's also we know that Rishi Sunak has been very passionate about migration policy and all of that. And then the numbers now show that net migration to the UK last year fell by 10%. We heard earlier some courses in some universities were dropped, obviously because the migrants who are supposed to be students there are not as much. But what does this meet the plan of Rishi Sunak? What does it do to the economy?
It does. I said that the economy is the key battleground, but, a close second place, of course, is going to be migration. As I said, the Prime Minister is going to be out and about across the country over the next 6 weeks. And he kicked off today in a small town in the north of England. And the first thing he was speaking about was migration, right? And his Rwanda plan, which is basically a deterrent to stop the boats coming from France. And if they do come, then they'll be sent to Rwanda. Now, the Labour leader, Sir Keir Starmer, has said already that as soon as he gets in, he's scrapping that, right? So that's not going to take place. But then how are you going to deter people from coming to Britain illegally? Because whether people like to have that conversation or not, it is a small island, and we can see that public services are absolutely battered at the moment. Nobody can call up their GP and get a same-day appointment. Some people have to wait weeks on end. We know that there is a long list of people waiting for appointments for the NHS, and there are some parts of society that blame that on migration, right? Which is why James Cleverly, the Home Secretary, in December set out new rules for migration, which haven't necessarily been captured in the data that was released by the Home Office this morning. But certainly, according to the Home Secretary, these new legislation, these new measures, such as increasing the minimum wage threshold, would prevent a further 300,000 people who came into the country last year from coming in this year. Controversial, yes, but certainly for a Conservative voter, these are the issues that are important to you. So yes, I think the fact that net migration has fallen 10%, Britain, the Conservative government would consider that a good thing, but this is not necessarily due to the announcements that were made in December. But then, of course, this does have a knock-on effect on universities, as you said, because so many courses are now being dropped purely because foreign students just cannot afford to come to Britain. So really complicated issues. These aren't issues that you can just touch on the surface. You've got to really unravel them. And of course, we know all of the migrants that are coming in, particularly to study, contribute significant amounts to this economy, not just with their intellect, but also with the hard work that they put in place. So really, as I said, divisive discussions. But this data from the Home Office this morning has played into the Conservative handbook, which is why Rishi Sunak was so keen to announce them as soon as they were released.
Yeah, obviously politicians would always be quick to do that. But let's see the markets and see how all of this is feeding into investors' sentiment.
Markets are in tip-top shape at the moment. Of course, the city are talking about the election, but I believe that they feel they're in pretty safe hands with the Shadow Chancellor of the Exchequer, Rachel Reeves, who, she is a very, very well-informed, very much on top of her brief. She's been given an endorsement by the former Bank of England Governor, Mark Carney. So the markets are pretty happy. Still want to hear more about what Sir Keir Starmer is going to do to enable us to grow more efficiently and sustainably. But if Rishi Sunak is out, which is what they say they are, the market seems to be cheered at intraday. The all-share in it's up 0.01%. The FTSE 100, that's also up by 0.01%. And the FTSE 250, the domestic market, that's up by 0.03%. In the currencies market, the British pound is currently trading up against the US dollar by 0.05%, though down against the euro by 0.15%. but up against the Japanese yen by 0.01% in it. I'd say keep your telly on. It's going to be box office viewing from Westminster over the next few weeks.
I know. We're up for it, Juliana. Thank you.
We are. Thank you.
All right, now interesting times coming from the UK. I'm sure you want to stay tuned to news from the UK for the next couple of weeks until after the elections, I'm sure. Well, let's head to Berlin now, where German CEOs are making more money again after seeing their salaries drop in 2022. Last year brought raises for top brass. Lars has the details. Lars Holter, good afternoon.
Thanks for having me, Ini. Well, let's look at the headline number first. 208 million euro is the total pay for the CEOs of 38 German companies listed in the country's blue chip index, the DAX. That is 2% more than the year before, and it comes out to just over 5.5 million euros per CEO. Of course, they're not all making the same money. There are 3 CEOs who made more than 10 million euros, and that would be Ola Källenius at Mercedes, Belén Garijo at pharmaceutical company Merck, and Theodor Weimer. He is the head of the Frankfurt Stock Exchange. Now, some CEOs, of course, are making quite a bit less as well. The 2 guys heading online retailer Zalando made less than $250,000 after a difficult year for the company. And there's outliers like the CEO of Porsche Holding, who just made about 1 million. Then again, he's not the head of the Porsche car maker, but merely head of the holding of the same name, which essentially is a holding company for Volkswagen shares.
Yeah, so does this mean that the companies are making good money also?
Yeah, sadly, that's not the case. And it's what makes this story yet another story of corporate greed, at least in some instances here. As I said, the CEOs of those top listed companies made 2% more than in the year before. The combined profit their companies made, however, is down by about 15%. So this trend is once again breaking a rule that used to be key in the corporate world. If business is up, salary and bonuses are up. And when business is down, so are salary and bonuses. Now, it is worth looking at some companies in detail, and we can see that while the overall trend is not great, it is also not that bad everywhere. Some of Germany's top earners are those car guys. Ola Källenius at Mercedes. He benefited from some bonus payments that are only due every couple of years. So they are kind of distorting the picture here. Or look at Daimler truck boss Martin Daum. He almost doubled his pay over last year, but that is also due to a long-term bonus that has now finally paid out for him. There's also a few CEOs whose pay actually went down. The leaders of Continental, Pharma-Seller Sartorius, and Realtor Vonovia, they made between 20 and 50% less than in the previous years.
Well, some people have to pay the sacrifice. What about the markets? What are investors doing?
It's mostly 2 things. Chipmaker Nvidia came out last night with some better than expected numbers, and it has pushed tech stocks in Asia. And it's also spreading to Europe and will likely push tech shares in America higher too later today, of course. On the other side, and that's what's also coming out of the US, we've seen the Fed protocol. And as much as investors were still hoping for interest rates to drop, there's no indication for that in the minutes. In fact, it doesn't look like there will be any cuts coming soon, and there might even be higher interest rates, all depending, of course, on future economic data, and that's the kind of numbers we're getting several times a week. So the situation there kind of remains fluid.
All right, Lars, thank you so much for that. Now let's race through Africa. In Ethiopia, in a bid to encourage exporters, Ethiopian Airlines has halved the shipping cost of coffee to the Middle East and Asia, bringing it down by to $1.5 per kilogram. The airline has announced that this reduction in transport fees is intended to encourage exporters and promote Ethiopian coffee in the international market. General Manager of the Ethiopian Coffee Exporters Association, Gizat Worku, expressed his approval during an interview with the journalist. They elaborate that the reduction in shipping costs from $3 to $1.50 per kilogram will be advantageous for both exporters and recipients of Ethiopian green beans. Talk about the advantages of having a national carrier right there. From there, we head to South Africa, where the Development Bank of Southern Africa, DBSA, has emphasized the need to create a financial landscape that balances environmental responsibility with financial returns. This was highlighted at an exclusive breakfast briefing in Johannesburg, where senior executives and investment professionals from banks, insurance companies, and asset management firms across Africa convened under the theme Unveiling Nature-Positive Finance Channels in the country. And of course, we do have a correspondent there. We'll get more about this in our subsequent broadcasts. In Tanzania, they want to encourage, they're getting some money from British International Investment. They signed that MOU of about $30 million with a British International Investment, and this is supposed to support the running of the economy in critical areas to boost economic activities. Now let's head to the crypto space. Ladi has been standing by to give us some updates.
Yeah, so it's a red color, but not looking so bad. You know,
yeah,
Bitcoin's still holding on.
That's good.
Yeah, still 69,000, ranging between 69 and 70,000 level this afternoon, just like yesterday. But we're seeing minor pullbacks in the market at this time. But some top stories now. We see Bybit CEO has refuted insolvency rumors right there in the market. There were claims that the exchange was hacked, but the CEO is coming out to say the exchange is still looking good at this time. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Great to have you.
Hello, Ladi.
Yeah, so
it's my pleasure.
Yeah, another exchange getting the news at this time, and it's Bybit, and they're saying the CEO is coming out to say there's no solvency issues with the exchange at this time. How are you seeing issues arising there?
In crypto, when you hear things like this being debunked, you begin to wonder what exactly is going on. But for newbie, if you ask me, please take your money, because it usually starts this way. A lot of platforms have gone under, and we've seen CEOs come to say this is not the way it's going. Then it turns around to be something else. The only platform over time that has gone through something like this, and we could believe at some point, is Binance, because of the numerous issues from hack at some point earlier, and all of the rumors that have come up with them being insolvent. Being CZ then, we say, which is the former CEO, we say funds are SAFU, but for Bybit, please, we don't want a situation where there's a black swan that everybody lost their money, like the case of FTS. When you hear things like this, you should be careful. Maybe 1 or 2% of your entire portfolio should just be there for the time being. But again, the centralized exchange platforms are really risky, because if anything happens, you lose all your money.
Right. I guess this is where self-custody, comes in handy when you're, dealing in this market. But what are you seeing for Bitcoin price action going into the weekend?
All right. So the truth is that Bitcoin has become popular. You can see what is going on in the US election. Bitcoin, cryptocurrency are playing a huge role. The then president trying to come back now. That's Donald Trump. He's collecting crypto donations, and the Democrats are not finding it funny. All of that are influencing all of the price movement here and there. You've seen the Ethereum ETFs that is about to be approved or not approved. All of those sentiments, Ethereum is going off the roof. So the euphoria is there, but again, people need to be careful of by the rumors, set the news, because now the market is looking all better or all good. Your vision is very high, and I think someone reasonable should be able to jump out of it now, so that they don't get themselves burned.
All right, Rume, always great having you. Thank you so much for the update.
Thank you, Ladi.
All right, so quite interesting that Bitcoin and crypto is playing into U.S. politics, at this time with Donald Trump trying to get some donations in crypto. Quite interesting.
Very interesting. Thank you so much, Ladi. Well, that's it on the program. Thank you so much for being a part of Business Incorporated. It's the fourth one. We'll still have one more tomorrow. You don't want to miss it. I wonder what we have cooking for you. Well, tune at 10 a.m. I'll be here to start the day with you, the business day, with you. And then, of course, we'll do 1 p.m. again. But before that, I'll give you details and summary of trading at the NGX at 10 p.m. News at 10. I'm Ini John Mecca.